A warm welcome from Amsterdam, and thanks for tuning in to a new episode of Game Consultant. Your host of today is Reinout.
Welcome at Game Consultant. It's Wednesday, April the 22nd, and it's the week Games and Finance. In episode 19, I was actually talking to Sergey, and Sergey was telling me a lot about investments, M&A, and Q1 started actually pretty good. We saw Scopely, we saw some others, and bottom line, $700 million was invested in games companies. And then we had to deal and still dealing with COVID-19, the coronavirus. In any case, this episode, I'm talking to Richard. And Richard is a TMT specialist over at the Edison Group. And they came out with a report. And the report is the European Video Games, a safe haven in troubled times. Well, you can say that. So we had a very in-depth interview. It might be long. I don't care. If you want to know where the gaming industry is at and where it might go, then this is definitely the minutes worth. Then second of all, I'm not doing so much on news. I have a few tabs open that I want to discuss quickly with you, but otherwise it gets too long. I like the initiative. It's done, well, actually at a very nice moment in time, because a lot of people are complaining they don't get any funding. And there you go. Some people stood up. Akin, and I'm sorry if I say the name wrong, but hopefully we talk next week or this week so I can do an item either on Sunday or next week, Wednesday. So it's Akin Babayigit, and he's the co-founder, CEO of Triple Dot Studios. Chris Lee, Ben Holmes, some others. So go to the site ffwd.games. It's Fast Forward Games. As entrepreneurs and investors are increasingly unable to meet in person due to COVID-19, the level of investment into gaming studios has slowed down dramatically. Entrepreneurs are not able to receive sufficient feedback on their propositions, and investors have a reduced ability to get to know the entrepreneurs and test the hypothesis further. Fast Forward Games is an initiative aimed at bridging that gap. We've brought together key gaming CEOs, VCs, and angel investors to offer a number of services to entrepreneurs: feedback, fast track, and lightning fast decisions. So yeah, they can invest. Chris Lee, Ben Holmes, Akin Babayigit, if I say it right. Oh, you guys are really testing me. Akira Ushioda, Matteo Vallone, Lior Shiff, Sekip Gokalp. Come on, guys. Alvaro Alvarez, and among others. So the group has excellent access to VC communities. As part of this initiative, we engage the support of Cherry Ventures, Makers Fund, Play Ventures. Well, there you have some names and people that can make things happen. All the respect to these people that do this when we need it the most as an industry. So email hello@ffwd.games. So I repeat, Fast Forward Games, or why I repeat, just look in the description of this podcast and you will know. Quickly doing some news? Heck, why not? So I said quickly some news that I wanted to share with you. It's mobile game downloads have gone up by 75% in Q1 into 20 due to COVID-19. As revealed by mobile measurement firm Adjust, which is located in Berlin, they come out with a report on the effect of the coronavirus. Gaming has surged under the coronavirus, with installs in last week of March more than doubling, 132% compared to the same week last year. Furthermore, session time in games have jumped 47%, showing players are spending more time in a game. And here comes a fun thingy. Another find in the report spotlighted casual games, stating that activity within this genre has seen an increase of 15% between the hours of 12 and 4 p.m. So let's say they are gaming in the afternoon. But meanwhile, mid-core games have seen a jump early morning, approximately 5 a.m. I repeat, 5 a.m. before peaking at 1 p.m. So peaking at 1 p.m. So shitloads of gamers that are actually still gaming at 5 a.m. and then maybe they're going to sleep and then people wake up and they continue and then it's peaking at 1 p.m. in the afternoon. Bottom line, everyone is sort of off and everyone is playing games during the day. News that was not so fun to read. Kickstarter experiences a 35% drop in live projects. As a result, the company has to prepare to cut costs wherever it can. Last year, Kickstarter earned $1.27 million in after-tax profit. However, that money has been reinvested in the first 4 months of 2020. Game Refinery, a company that I had on my watch list and still is on my watch list. The CEO is Marcus. Hello, Marcus. Remember our agreement? We still should do the interview. Mm-hmm. Game Refinery is adding a new ad monetization tracking feature. Developers, marketeers, and publishers will be able to see the in-app monetization trends, implementation formats, and the ability to see popularity of many iOS games. The new data available through the feature is immediately available for all games being tracked by Game Refinery. And that brings me to the last, my friend Hendrik Lesser, who calls himself the boss mob of a family of gaming companies. He's saying we're doing a biz dev online event for developers to meet publishers and investors in time like these. It is important. Yes, Hendrik, it is important. So the site is www.egbg.au. And as you can see, they have a lot of support by publishers. And so updates on the website. And let me see. Yeah, I did actually ask him a question. Pure background that I asked, and he said, Reinhard, I came up with it, rally it, the partners, and EGDF. Why a lot of us, games industry, are not doing bad today, but we will realize the day after tomorrow, after we didn't meet to do biz dev for months. There might be a gap. Participant can expect many pubs and investors. They already confirmed. They have registered and are still registering. Pure BizDev matchmaking, like an online game connection with focus on Euro devs, meeting worldwide pubs and investors. Anyways, I'll put the links online and then you guys can take it from there. We keep it short. So today it's finance and games again, and it's the week of finance and games. And I have been talking to a lot of people that raise, people that have ideas about going out there and raise funding. And there is skepticism in the market. Some people say, yeah, you can still raise, and other people say, no, you should actually wait. So today I have Richard Williamson, and he's actually of the Edison Group. And the Edison Group is an investment, research, investor relations, and consulting firm. Now, there's a mouthful. Richard.
Absolutely perfect, Reinhard.
Yeah.
Captured it nicely.
I got it from your side, I have to be honest. Hey, you guys, you released a report. It was April 8th. And basically you said, oh my God, it might be outdated already. The European video games, a safe haven in troubled times. I mean, what makes you say it might be outdated already?
Well, it's one of those funny things that the world is moving so fast. We have a normal publication process, and I kind of had to shortcut that as well, to make sure it was out in a timely manner before Easter.
Yeah.
Because if you look at what's happened to share prices over the last 4 weeks, they have they plunged. Certainly games industry share prices plunged 30, sometimes even 50% in March.
Yeah.
And if you look at them again today, they're pretty much back up to pre-crisis levels across a large swathe of stocks.
Yeah.
The bigger caps seem to be doing better. They've been more robust. And some of the smaller caps, certainly in less developed areas, have struggled a bit more, such as esports. So happy to pick up some of those themes.
Yeah, because we were emailing about it, and the stocks were up, and they were saying Activision, Blizzard, Capcom, EA, NetEase, Nintendo, Zynga, they're all hitting 1-year peaks last week. So. Yeah. Is that just a moment in time, or is this going to be? Are they going to be steady now? Was it just investors were a bit like, oh, what's happening? Or
it's always a mug's game predicting what's going to happen to share prices. But essentially, my view is that over the long term, the games industry is a great place to be and a great place to be investing. Yeah. So there will be shares that go up and go down. Is the console, is this a new console launch going to go ahead at the end of the year? So Sony, Microsoft certainly saying it is. There are factors like that. And again, if there's a double, if lockdown isn't a single issue but a double issue, and so we have to go back into lockdown, that could certainly knock some of the services companies.
Yeah.
But again, how deep is this recession going to be? We saw oil prices, US sort of oil prices below, sort of in negative territory.
Yeah.
This is unprecedented. Nobody's been here before, and nobody's seen this kind of impact on a global basis. Yeah. So I remain sanguine. The games sector, if you look around other sectors, is a great place to be, and it's still smiling. But there aren't many sectors smiling at the moment.
Yeah, because I'm looking at the report. It's 11 pages, and if I hop to page 11, I see the strength, but then the weaknesses. No global tech titans in Europe. I mean, that right away got my eyeballs.
Am I about to get quizzed hard on that?
No. I'm really interested. I mean, what do you mean with a tech titan in Europe? I mean, what's your definition of a tech titan?
Well, again, I suppose I'm just trying to say that the likes of Apple, Google, Amazon, Microsoft are all US based. And then you've got the people like Tencent over in China. Yeah. So who is the sort of the European mega cap to compete with those guys?
Yeah.
And they are pumping an awful lot of money into the games industry, into streaming, into content, and they're going to be shaping the direction the industry takes over the next 5 to 10 years.
Yeah.
The European companies, there are some great games companies amongst them, but they're not setting the trends in quite that same way.
Yeah. So as you said, then Asia and the US are still in the lead in this gaming industry. Substantial investments and innovation occurring overseas, not happening in Europe. I mean,
well. I would hold back on that. I think the European landscape is a fascinating one. I think there is such diversity that people think about a games investment. And of course, the reality is, you're investing in different business models in different geographies with different risk profiles. And the fact that that there is a fragmented space in Europe, again, from an analyst's point of view, from an investor's point of view, means there's opportunity.
Yeah.
Whether that's who knew about the Polish game sector 5 years ago.
Yeah, true.
I hope I'm not hurting anybody's ego there, but
no.
It kind of has arisen by stealth, and with CD Projekt now as a figurehead, there are a number of other companies coming up beneath it.
Yeah,
I didn't know that 5 years ago.
No. They really have gone up. I mean, more and more people are talking about it. So that definitely on Poland, that's a correct one. So if you look at the report, I mean, you got it out there, April 8th. What were the highlights, or what were the surprises? Maybe also when you did the research.
Well, the grand conclusion is that if you are a games company and you've got games in the market, lockdown, is hugely beneficial.
Yeah.
So there are more people with more time on their hands, with fewer options, and therefore they are reaching out to what's familiar, or playing more, or trying games for the first time, whatever it might be, and in different sectors you're seeing different behaviours. But to some degree, I was slightly surprised. I assumed this would be brilliant for PC and console games, but I thought it might not be so good for mobile games. But that preconception on my part has been dispelled. Every single mobile games company I've talked to has said this has been great for us. This is mobile games are a form of socialization. If you can't interact with your friends sort of normally, of course you can do it over, through headsets and so on. But mobile games are a great way of doing it as well. So mobile games are peaking. People like G5 have picked up 50% over the last month or so, along with all others.
Funny, because that's what I was looking at. I saw the largest quarterly rises and the fallers. What does it make then a difference? For example, I mean, you look at Codemasters and Rovio and Keywords actually are the fallers, and then you see Stillfront and Ubisoft, G5, as you said, Paradox, and they're going up. What's the difference between the companies? I mean. Are the investors looking at portfolio? What does it make that you become a riser or a faller exactly at this moment? And this is March. Let's say Q1.
I was going to say this is very much a snapshot. So this is what's happened over Q1 20 cumulatively. So it doesn't take account of sort of ratings when companies went into the start of the year. Yeah. Sort of Keywords actually middle of the pack, as is Rovio to some degree. But those that have performed least well have been those that either have a need for cash. So people like Gfinity have had a bit of a tough time. They've just recently completed a 2.25 million placing, which has mean that their share price has suddenly tripled. But nevertheless from a very low base. So again, it's points in time, it's periods you look at. Yeah. But in general, I would say those that have fallen furthest have been those that are either in esports, service providers to the esports sector, or challenged businesses overall. Yeah. And then, you mentioned people like Codemasters. Codemasters were potentially a bit unfortunate. They had Fast and Furious 9 coming out, which was going to be day and date with the movie. But of course, the movie's been postponed. So Fast and Furious 9 should still come out in the current financial year, but it's been pushed back. So there's a level of uncertainty there. Yeah. And the reality is it underlines the fact that those with digital models, with a broad portfolio of titles, and live games in the market, they're best placed to benefit from this. And those with narrower portfolios or singles, exposure to a single IP. And again, there have been more questions over service providers as well. People like Keywords have got the best part of 8,000 employees. They've very successfully migrated 5,500 of those to remote working. They've furloughed some. But they may well be very well placed in H2 20. So there's been a hiatus here, but for most of the games industry, the lockdown has actually been a genuine benefit. Yeah.
So basically, what the game industry is saying, like, crisis is good for us.
Well. It's an interesting way of looking at it, and people have been quite careful about how they phrase it because COVID-19 is a serious matter. So you don't want to be seen crowing from the sidelines, but nevertheless, as people have fewer options, games as a diversion, as a distraction, as a way of taking yourself away from the reality of a sort of tough incarceration, lockdown, curfew, whatever you want to call it, is a great proposition.
Yeah. So I had Sergey from Mail.ru Games Ventures, and he basically said, so in Q1, $700 million went into gaming companies. When I woke up on January the 1st, I definitely had indicators that I thought like it's going to be a very strong 220. Investments, consolidations, even acquisitions, and we saw a few. Esports definitely leading the troops. Everyone was really enthusiastic about esports. The industry, it's growing. And now we're towards the end of April. And, what can we say? Esports are taking a dive. That's mostly because the events are not there, but online it is. We don't see.
I was going to say that was one of the sort of conclusions that I reached in terms of esports is, as a small service provider or as a service provider sort of reliant on revenues from live events, then that's problematic. But of course, from a broader, longer term perspective, every single sports sort of real sports event, real sport is looking at the possibility of virtualizing their business and adding that virtual element, adding those additional eyeballs. And this is a great time to be experimenting and sort of learning how esports works so that, 2021 and beyond, I think we'll see much more convergence between real sports and esports.
Yeah, that was actually Chris Reed, who had an item where he was saying, like, what was it? The car racing, NASCAR. It's more elderly that watching it, and now the young ones are playing it online, streaming, and now, those two target audiences come together. But
all the Formula One races,
and soccer.
It's nice.
Yeah. And maybe stupid comparisons, but an artist, he or she or the band has the music online, but they're actually going on tour to make the money. Is that a good comparison then with esports? So you basically are online a lot. You can watch the game, but in the end, I sort of didn't thought about it. I thought like they make a lots of money online, but apparently the events are crucial for esports. To generate revenues?
Well, it depends who you're talking about. Of course, what we're not talking about here is who actually profits from esports, and those that are profiting most are people like Amazon with Twitch, Google, and the platform holders, and the games publishers themselves. So these tournaments extend the lives of their games and sort of improve engagement, and they're a great boon to a lot of mature titles. The service, but when we look at the quoted sector, it is about smaller service providers trying to make money out of esports from sponsorship, event fees, merchandising, and it's a much less mature business. So we are only looking at it, if you like, a small part of the overall industry, and the overall esports industry is in rude health. But from a service provider point of view, just the profitability of their business model, the development of the business model has probably been put back by at least 12 months.
Yeah, got it. So you mentioned it just like game conferences. So they are cancelled. Do you see any effect? Some people say, because I don't have a game conference, I might not find publishers, so you have to find it in a different way. Publishers have to respond in a different way.
Yeah.
How big is the effect of not having game conferences in 220? Because Gamescom is a goner too now.
Yeah, well, again, that's in some ways it doesn't really impact the games industry, but I suppose those it does impact most are the innovators. So young startups looking to build relationships with publishers and sort of build relationships within the industry are going to find it much more challenging to actually make those connections. For established players who have a brand name, who are recognized, who can already have that network of contacts, I think video calls, whatever. I think that's perfectly tenable. But I think it is going to be harder for startups to make the connections that they would have made at GDC or E3.
Yeah. So it's really the indies then that are more hit than the usual suspects.
I think that's so whenever you have market dislocations, whenever you have recessions, I suppose that the smaller, more fragile businesses get hit first. And that's kind of what we're seeing here is if you're an established player with a mature business model and profitable and cash generative and you've got access to capital, you will probably see yourself through this quite happily. But if you're a small business that's sort of burning money on a day by day, week by week, month by month basis, and trying to get to the end of a project, and only then do you start to make money, that's not a place you really want to be today.
Yeah. And then one thing you covered, although the whole industry is always saying like, if you can get a good IP, like a movie IP, and you can connect your game to it, that's going. Bottom line, we're seeing that movies are being delayed. So let's say industries connecting, because a few episodes ago I was saying like, gaming is the center now. Instead of gaming going to other kinds of verticals, the verticals are coming now to gaming. So everything around gaming right now that stagnates has an impact on gaming, I would say, on new products, new games. Is that?
Again, that's right. And the bigger question, I suppose, we're all trying to ask ourselves at the moment is quite how big an impact is this going to have? In some ways, it's quite hard to see audiences rushing back into the cinema. Certainly in FY20. Are they going to be back in the same numbers in 2021? It seems tough to believe. So are you actually talking about, as you say, gaming becoming more centric with potentially cinema supporting games here? But you are talking about a changing of the order of things and a rethinking of how business is done. And quite how it all plays out is not yet visible, and depends how COVID-19 plays out to some degree as well.
Yeah, and then the part of streaming. I mean, everyone is now watching. Kids are at home. Parents too. The streaming is peaking. So is that fastening things up? I mean, in the past I was saying like, people watch Twitch and it's more like kids. But now, because we're all at home, we might get to it. We might give it a shot. Is this accelerating the way we consume games and quote unquote watch games?
So COVID-19 seems to be accelerating the trend to digitalization. And that's across pretty much all industries. So those companies that are doing well are the the SaaS type business models that can be delivered effectively remotely. So you're absolutely right. The streaming companies are doing hugely well at the moment. Netflix, Disney Plus has launched, and people like Zoom, of course. That their share prices. I won't quote it, but I think it's doubled. There are challenges, there are challenges to all this. Does Zoom's cost base actually increase in line with usage, and with so much free usage, does their cost base actually sort of expand faster than usage? So there's sort of headline thoughts, and sort of you sometimes need to dig to a deeper level. But the one thing that gaming has that, say, Netflix and sort of more linear streaming doesn't have is much more variety and replayability. If you play a game, the experience is not necessarily the same time after time after time. So you can replay and do different things. If you with Netflix and Disney Plus, there is a limited catalog. And once you've got through the good stuff, you're looking at the mediocre stuff, and then you're looking at the sort of crap at the bottom. And the ability for the industry to create new content at the moment is also constrained. And with sort of viewership going up, or streaming going up quite so meteorically, how quickly will people start to get bored of those more linear offerings? And therefore, they'll see it. They'll certainly benefit for a time, but will they benefit if we were locked down 12 months hence? I don't know.
Yeah. So supposedly we have a glass ball, and today is the 31st of December, 2020, and we'll look back on 2020. What are we seeing?
I can't answer that. Anything I'm going to say is going to make me sort of cringe with embarrassment in 9 months' time.
I'll do with you.
All I can say is what I hope is that the lockdown phenomenon is a passing phase, 3-4 months, whatever it is, and that therefore by the summer, restrictions are easing and people are getting back to work. And there is huge pressure on governments to open up, to open up and restart their economies, and we're starting to see signs of that in Germany already, and the US. The pressure there seems to be phenomenal. What that means to me, sort of from a gaming perspective, is that there will be a boost over some relatively hot months when revenues would otherwise have been weaker. It then potentially leads into the console launch and the colder sort of winter months when people traditionally play more games. So you should see FY20 as a really landmark year in terms of financial performance for the games industry. And you will have introduced a whole range of people who may have not played games or played games casually, or so potentially stepping up. The question to me is, does a recession follow, or how deep a recession follows, and how painful is that going to be? How painful is the impact of that going to be in sort of H2 20 and sort of 2021? And the impact of that might be people stepping back down rather than buying a new console. They might stick with the old console for another 12 months. Rather than buying a premium game, they might buy a AA game or play casual games instead. So there are options within the firmament. And
if you look at, because we were emailing about it, and so you basically said if you have something on the shelf right now and you're working on a complicated game that still has to launch, or you're out there raising funding. You said that's then it's a pretty hard time at the moment.
Well, and what?
But also,
what makes me say that? So I've talked a little bit about startups. So again, raising capital. VCs are essentially hunkering down for a period. They'll be making sure, corporates and VCs are hoarding cash and making sure they've got what access to cash they can have for the moment. They're waiting to see how this all shakes out. And only once they've got a clearer view of where we're going with COVID-19 and what happens afterwards, will they start considering new investment opportunities rather than focusing on their portfolio. So that's from a startup point of view, and from in terms of games that are under development at the moment. With people moving to remote working, there's a time lost there. With people remote working, there has to be a loss of efficiency. It can't be as efficient. Though interesting enough, I was on the Sumo call earlier today, and they were saying that staff retention is up. So people aren't moving on in the same way they were. Sick pay. Absenteeism due to sickness is right down. So people seem to be happier working from home and sort of clocking in, clocking out in a much more more committed to their roles actually than if they had to come into the office. So certainly in the short term, there are some things that offset that lack of efficiency. But I can't believe that if remote working persists, that teams are going to be able to work. Certainly large teams are going to be able to work as efficiently as they did beforehand. And when you talk about some of the service provision as well, in terms of QA, voice acting, just pulling all that together when people are in lockdown and sort of, working remotely is going to be a challenging scenario. So therefore, looking at people launching major games for back end of this year, I think there are some real challenges in terms of actually delivering those, on time and to budget within that time frame.
Yeah. Yeah, that makes me actually think. I mean, the consumer exhibitions like a Gamescom. I mean, some of the bigger companies like the Sony's, EA's, they always demo their games over there, and then people are standing in long lines just to wait, and they can actually give it a shot, give it a try. Let's say, these events are not happening. That's for sure. Yeah. So will that mean that those big companies will delay their games, or will they come up and find a different way and do it via digital and do more heavy marketing online in order to release the game?
There are certainly challenges there. I can't imagine that too many people will choose to delay their games materially, because any delays that get pushed out of the current financial year or current quarter have an impact on management and their performance reviews. So I would assume, and when you're trying to launch in parallel with to make your game available for new consoles, there are certain things that you need to be day and date with. I think people have to just try to deliver as best they can, but that there may well be increasing cost in terms of achieving that deliverability.
Yeah. And then I'm seeing some initiatives, some smaller firms, some group of people that basically come together and say like, hey, people do have troubles with raising funding. There is, what is it called? Gigi, who's doing the Fast NFX. And there are some others, which are, what was it called? ffwd or something? That's a London group of investors. So they basically say, it's heavy times. If you need funding, send it in to us, your pitch deck, and we make a decision in 48 hours. It's very good that they try that.
Very interesting. I haven't heard that. That sounds very interesting indeed.
Yeah, it's sort of COVID-19, and it does it actually mean that I find it interesting. It's ffwd, and that's actually with Ben Holmes, Chris Lee, and I find it always very difficult to say his name, Akin Babayigit. Yeah, I hope I said it well. He will kill me. He's actually of Triple Studios. But it's so they have a group, and you can basically send in your pitch deck, and they make a quick decision. Yeah. I mean, my first question was, if you can do it now, can you do it in the future too? Or what do you think of those initiatives?
Well, I think anything that helps people, there are companies that are going to be, stuck for options. If they need funding in the short term, then this sounds like a great way forward. I suppose there's always the worry that if there's only one source of finance, or small numbers of sources of finance, then of course they might expect more of a share of the pie. So there's always going to be a trade-off there. If you want to get the best terms, you hold off funding until you've got something concrete, and wait till market conditions are better. But if you can't hold off, then got it. Any option is a great option.
Yeah, it's actually the site is ffwd.games.com.
I will have a look.
It's Fast Forward Games. Yeah, Fast Forward Games. It's an initiative that brings together the top gaming CEOs, VCs, angel investors, offering their time, expertise, network, and experience to accelerate the funding process for gaming startups. Due to COVID-19, the funding climate has changed, resulting a more challenging environment for many startup studios that need capital. And basically what they have it on the site. It says feedback, advice, fast track into major VCs. So they enlightening, fast angel investment decisions.
Yeah, well, the reality. Oh, yes, I remember these guys. So the reality is that investing in games IP has always been quite a challenging thing to do, and those are the best place to do it. Tend to be those who've had experience with the games industry, i.e., chief execs and founders of other businesses. So they sound like the right guys to go to.
Yeah. No, I like these initiatives, and I think right now it's lots of developers can benefit from it. The only thing that I thought is like, hey, does a virus make us work differently? And then also, in this case, I mean, they can quicker do the facilitation to bigger VCs, but also angel investments. Is that something that they actually should continue also after COVID-19?
Well, absolutely right, and certainly yes. I think the paradigm has been broken. I think things like COVID-19 do break the paradigm. So we are looking at new ways of working. We are sort of reassessing. What we did before, was it right? And everyone seems to have transitioned to. Sorry, not everyone, but those who can have transitioned to remote working, and it seems to be working relatively effectively for many. So therefore, do we need to be in the office as much as we did? Do we need to be traveling as much as we did? As I said, the oil price is right down. Just people are not using cars, planes are not using fuel. Do we need all of that? Should we be going to GDC E3? Should we be staying at home and sort of having virtual conferences? So there are all sorts of questions, and I'm not saying they're all obvious or we won't revert to habit. But the questions are being asked, and you talked earlier about the fact that major consumer conferences have been cancelled. People are going to be there is no choice in this. People are going to be forced towards online marketing, where before they sort of developed a buzz by having people actually touch the game, feel the game, use the game in these conferences and get excited about them. That queuing concept is not going to be coming back at any time this year. I'd be very surprised if it comes back next year either. So on that basis, with that kind of sort of time horizon, online is the only place to be at the moment.
Yeah, it's the only place where we can go.
There is that. I've got a nice garden outside, but I won't argue with the point.
Yeah. Hey, and what can we expect of the Edison Group? I mean, as I said in the beginning, your investment research. Well, this is one of those. How many times are you doing this research a year?
Well, I did a couple of notes last year, so a UK sector note, and then a sort of took a much more European perspective, and I think that's probably where I'll stay. So this in some ways was opportunistic update to the European note we put out last summer. So I would hope to be putting out a couple of notes a couple of sector notes a year. We also cover Keyword Studios, so just to disclose they're a client, and we're about to initiate on Media and Games Invest as well, a German business. So we're probably talking to 10 or 15 other companies in the space as well. I would love to build up a bit more of a network, of clients within the game sector, because it is infinitely fascinating.
So keywords we did cover. So they're a bit under pressure, and Media and Games Invest I saw actually in your list as 1% up. So, and then you had something interesting where you said like.
Well, again, what makes Media and Games Invest and Stillfront stand out? So, in some ways, I think of Media and Games Invest as potentially a baby Stillfront, but they are debt-funded business, significantly debt-funded businesses, and historically, the truism was always that the games industry isn't a debt-funded business, but it's interesting. I think that paradigm has broken as well. There is a lot more predictability to these revenues. There is a lot more sustainability to these revenues, and we're now in a position where that predictability and revenue stream can be seen for 5 years hence, and therefore it's debt funding is absolutely appropriate.
Got it.
So, sorry, I was just going to say, so innovation. Again, I see genuine innovation in the European landscape across multiple jurisdictions and in different ways.
Okay, elaborate, because that's why
That
I
was
was heading to.
before I rudely cut you off.
No. I mean, that was sort of an area. I mean, if okay, we're not going to use the glass bowl, but then what kind of advice would you give any game developer? I mean, and forget the large ones, because they have all kinds of advices. But if you are a studio, let's say 10, 20, 30 people, you have about 2-3 games out there. You have a runway of, let's say, at least, let's say a year or something. I mean, any advice for... And then secondly, I want to give that to you also. Will it become a buyer's market? Is cash king because these companies, these studios that I'm just describing, might come under pressure?
So let me take them the other way around then. So is this a buyer's market? It is outside the games industry. I'm not sure it is in the games industry.
Okay. And
again, there will be exceptions to that. There will, we talked earlier about areas of like esports and potentially VR, AR, things like that, where the business model is not so proven. There is there is cash burn still. I think that's a difficult place to be, and there may well be some consolidation there. But with in general, with games companies, with games in the market, live games. The ratings are at sort of at or close to all-time highs. Share prices are at or close to all-time highs. It's a good time to be appealing to to have a proposition that consumers want, and so for most of the games industry, cash is not actually the issue. They are generating cash, in greater quantities they have for a long time, if not ever. And of course, this $150 billion industry, as we all know, growing at 8-9% a year, that sort of order. This is a landscape that I struggle to see how much it's going to change from a high level perspective over the next 10 years. I see continued growth. I see continued digital demand. And I see it as a great place to invest. There will be winners and losers within that sort of high level, that sort of helicopter view. We talked a little bit about streaming. It's kind of not here yet, but surely, sort of COVID-19 highlights that there is a business case to have a meaningful streaming player. But I think it just came a couple of years. The impact of COVID-19 came a couple of years too early for the streaming industry. And there's a lot of technology investment to get through before streaming can be a meaningful AAA proposition. I would posit, but let's see how things develop. In terms of developers, in terms of somebody who's got a couple of titles in the market, looking thinking about what to do next. To some degree, I wouldn't be impatient. So, firstly and foremost, I have never developed my own game, so I'm not a game developer. I'm sort of looking at it from a financial perspective, and again, I try not to judge businesses based on the strength of their titles. I tend to look at the financial performance of those titles and the dynamics of the business model. But I am. You can make huge amounts of money by betting big on one IP that comes good. But that's not a particular model that I feel comfortable backing. I'm much more long term than that. Building up, block by block, building scale, building predictability, and trying to remove the need for external funding. So making sure that building yourself to a place where you can be self-funding, so that you can take risks, within the financial parameters, without risking the business. That's the ideal place to be. And there are a number of guys, you talked about how much M&A had been done in Q1. I think it was largely 2 deals, if I recall. Stillfront made an acquisition of Storm8 and Embracer. In general, Stillfront has built out a portfolio. I love portfolios of recurring revenues. They may be unsexy. They may not hit the headlines in quite the same way. But I think that's a business model that really, everyone can buy into. And whether it's equity funded, certainly at the start you'd want to be equity funded, but as you mature and as the predictability grows, debt funding becomes an option. And potentially more of the games industry should now be considering debt funding as part of their sort of capital optimization.
Yeah. And since we're talking then about those bigger companies, I've been thinking about, and this is really the last question, I'll let you go. Tencent. Tencent. I hear Tencent all over the place. Yeah. I mean, cash is king, but when is someone saying like, okay, the dominance of Tencent is becoming too big on this industry? I mean, we're talking about, what do you say, $150 billion industry. I mean, if you look at where Tencent or which companies are tied to eventually Tencent, then quite a substantial part of that 150 billion goes directly or indirectly to Tencent. I mean, is that healthy?
Well, it's fascinating, isn't it?
Fascinating.
You have to respect Tencent and what they've done. They seem to have crept in by stealth, taking 5, 10, 15, 20% stakes in businesses, which is not a typical strategy because you don't get control. They have a number of companies they've taken much larger stakes in, of course, as well. But in general, they don't control the industry. They are participants in sort of games companies. So you look at people like Frontier. I think their stake, I wouldn't swear to it, but it's certainly 10 to 20%, isn't it? I think Antstream, a sort of nascent streaming business, has also got a 10% stake in it. They took a stake in Sumo recently, 10%. They've acquired Funcom sort of outright. So Funcom, if you like, is an outlier for them. They've got stakes in Epic, Riot. They're all over the bloody place, and I think they're picking up some very interesting, very quality businesses. But they're not controlling them. So quite how it all plays out, I don't know. I wouldn't. If I was a games developer and I had the option of taking a stake from Tencent, I certainly would. But keeping it that 10 to 20% level just means that you, the owner, you, the founder, probably keep control of the business. With the stamp, I suppose, the stamp of quality that Tencent brings, and that would be a fantastic place to be.
Yeah, got it. Well, I'm going to thank you, Richard. I think we covered your report, and very interesting also to get a more insight also on the European.
Well, I don't know if I need to apologise, but I have talked mainly about the European industry. I haven't talked too much about EA or Activision Blizzard, so.
No, but we're reading enough, and it's. I think it's interesting also from Asian perspective or US perspective to get more sense of what is happening in Europe, and for me it was also very insightful. So, I mean, I looked at the companies that basically were mentioned in the report, and those are the companies that we're reading about when you talk about Europe. So. I'm definitely going to invite you when you have your next report ready. So keep me in the loop. And I want to really thank you very much for the time and explanation.
It's a real pleasure. Thank you.
All right.
Cheers.
Thank you very much. Thank you, Richard of the Edison Group, to have this interview with me. I really enjoyed us talking, and so do check out the blog with all the links to people, to their LinkedIn profiles, but also I have the link to the report. It's getting more and more fun. I'm seeing that the numbers go up really quickly, maybe also because of the coronavirus. Lots of listeners, and I'm stressing out every week to say, like, hey, I do get lots of inbound emails and apps. I'm trying to be responsive as possible, but also have my normal work. In any case, again, I hope you like this episode, and ciao for now.
This was all for today. Thanks so much for listening to Game Consultant. Tune in next week for a brand new episode. And remember, do share this podcast with other members of the games industry.